Okay, last meeting we have discussed quarterly income tax. So we have already go through with the explanation for quarterly income tax of an individual taxpayer. So we have already discussed how to apply how to deduct those previously paid income tax from previous quarters. So now let's proceed with our discussion on married taxpayers, both with income from business or profession. Okay, so take note, taxpayers only earning business income or professional income is applicable with this tax discussion. Okay, so let's start. Husband and wife must compute separately their individual income tax based on their respective taxable income. Okay? So take note, compute separately. Okay? So you have to compute separately. You have to consider each particular specific income of each spouses. So hindi mo pwede ma-combine. Okay? So next, for income exclusively earned or realized by either of the spouse, the same will be divided equally between spouses. So guys, in case of conjugal partnership of property for married individual, so those properties which are jointly owned by husband and wife should be should be divided equally. Okay? So if they have spare lot or farm lots, the income or rent income or any other income generated from that property which is jointly owned by husband and wife should be divided equally. The same is true with the related expenses. So, 50-50 sila ni husband and ni wife. If that is conjugal partnership. Okay? So, conjugal partnership na subukang kalabanan nga coverage if the married happens to be wala sang prenup, mga prenup agreement. So if there are prenup agreements, so of course you have to follow what is agreed on their prenuptial agreement. Okay, third, where it is impracticable for the spouse to file one return, each spouse may file a separate return of income. So what does it mean? So guys, if husband and wife is earning income from business or profession, and when there is practicality that all of the husband and all of the spouses, I mean, can join their filing. So guys, let's not confuse with the first bullet. Ang first bullet, guys, is separate computation. What is meant by the third bullet is joint filing. So if ever that husband and wife is under the jurisdiction of the same revenue district office, for example, in Manila, both husband and wife is earning or under the jurisdiction of RDO in Manila, so they can file their returns jointly. So in short, two computation, one income tax return. That is what we meant when by the third bullet point. So two separate computation and one paper or one income tax return ang i-file ni husband and wife. So that is joint filing if that is practicable. But if it is not practicable, of course, separate computation and separate filing. So examples where joint filing is not practicable is that when husband is under the is filing or under the jurisdiction of different revenue district office with his wife. So for example, si husband sa Bulacan files ang income tax return or under siya or doing business in Bulacan. So of course, husband will file and pay his income tax in Bulacan or in RDO in Bulacan, while wife rather will file and pay in Manila. So in that case, joint filing of their income tax return is impracticable. So they can file and they can compute, of course, and file separately their income tax return on their respective RDOs or Revenue District Office. Okay, so this is just an example of income tax return, that is BIR Form 1701. I would like to highlight if joint filing is practicable. So the income tax due or the computation, amo ning guwa sang joint filing, guys, there is a column for the taxpayer or filer. So if that would in general, that would be the husband. And third, his spouse. So, sa third nga column, ang spouse niya. So, of course, you have to indicate on the number 18 item, filing status, and you have to mark X, the box relating to joint filing. Okay? So, diri kayo ma-file, ma-correct joint filing. So, if ever, as the case mentioned in third bullet point, that the joint filing is impractical, so you, of course, you have to X mark the what we call separate filing. Okay? So we will discuss how to file, how to interpret, how to use the BIR forms sa later part of the semester na lang. Okay, sige. Next, illustration for married taxpayer both with income from business or profession. So taxable year 2021, the amount is 4 million for gross income or sales of Mr. Alocard from his computer sales business. While his wife, Laila, is a professional, a practicing CPA with the gross receipts of 2,500,000. Then, both of the spouses earned rent from their property, which is a lot, in the amount of 600,000. So, guys, the information or the figures indicates it is an annual amount. Annual siya, isa ni sa katuig. Third, uh, 1 million is incurred for the activity, business activity of Mr. Alocard, and another 500,000 was incurred in the practice of profession of his wife, Laila. Expenses on rental, 200,000. So the question is, how much are the how much is the income taxes of Alocard using graduated, and how much is the income taxes of Laila using graduated income tax? So let's compute. Okay, so the computation, so we are using the format as provided by the income tax return, naka 3 columns. So first column is the description, second column is for the taxpayer, and the third is for his wife. So gross income or say gross sales or receipts, so as given, then your non-operating income, 600 divided by 2, since the problem is silent, so we have to assume that it is a conjugal partnership of property. So all you have to do is to equally divide it by 2 ang aton nga may equal share ang husband and wife. So that's 300,000 each. So that gives us a total income of 4,300,000 for the taxpayer and 2,800,000 for his spouse. Less cost and expenses. Okay, so 1 million for business, which is provided in the problem. Same is true with the cost and expenses of doing or practice of profession of his wife, 500,000. Then, the relating expenses on the income jointly earned by husband and wife should be as well divided or equally man Japan. So divide by 2, that's 100 each. Then that gives us a taxable income of 3,200,000 for the taxpayer or for Mr. Alocard, and 2,200,000 for Mrs. Laila. Okay? So using the graduated income tax table, that would refresh our our understanding on how to apply, how to use the graduated income tax table. So try to relate, guys, try to review your income tax table, then you will confirm that it will be on the bracket of over 2 million but not over 8 million. So the first tax so the tax on the first 2 million will be 490,000 plus an additional income tax which is 32% of the excess of 2 million. So in the case of Mr. Alocard, the taxable income is 3,200,000. So in short, the excess of 2 million is 1,200,000 multiplied by 32%. That gives us an additional tax of 384,000. So plus the income tax or fixed income tax for the first 2 million sa iyang taxable income which is 490. So that's give us a total income tax of 874,000 for Mr. Alocard, and the same process will arrive at a 554,000 income tax for Mrs. Laila. Okay? So actually guys, the only thing na nag-change lang compared to our previous computation is the joint income and the joint expenses of the husband and wife. Okay? Wala sang may naglain. Duwa lang gid ang aton naging computan, and if there are income and expenses that cannot be specifically identified to the spouse, you have to consider that it is a conjugal income and expenses. So therefore, you have to divide. You have to share it equally between spouses. Amo lang nag-change. Amo lang gid nang naglain, and the rest is the same principle, the same application on what we have studied on the previous discussion. Okay? So let's proceed. Okay, so I'm going to share the taxable income because ang income tax table naging discuss naton on our previous discussion will no longer be applicable starting January 1, 2023. Okay? So if you have seen the same bracket, wala may naglain sa bracket guys, still the same. The taxes is also the same, 250, 400, 800, 2 million, and 8 million. What change is ang additional tax or the tax for the excess of the bracket nga 250, 400, 800, 2 million, 8 million respectively. So when subong we are using 20%, and starting January 1, 2023 it will be 15%. Okay? Then your 25 will go down to 20, and your 30 will be 25, and your 32 will be 30, and ang 8 million and over is remain as 35%. Okay? Okay, ang tax nilang, fixed tax nila nag-change man guys ha. From 30,000, it will go down to 22,500. From 130, it will be 102,500. From 490, it will reduce to 402,500, and from 2.4 million it will become 2,202,500. So this table will be effective on January 1, 2023. So what we have discussed or what we have used nga graduated income tax table under this topic will no longer applicable when we reach January 1, 2023. Please take note. Okay? Next. Okay, so who are not required to file income tax return? So sino ang mga taxpayers which are not required to file their income tax? First is an individual earning purely compensation whose taxable income does not exceed 250,000. Because guys, 250,000 income is not subject to tax. If you can remember those mga discussion natin in previous or in last week, ang fixed deduction natin is 250. Is it that coincident? No, it's not. Because that's the portion on which the law does not require taxpayer to file tax. Okay? Hindi pa na sa subject to tax ang 250. So, hindi na siya coincidental. So, if your income does not exceed 250, you don't need to file your income tax return. Okay? Purely compensation. Okay? Take note. Purely compensation income. Next, an individual whose income tax has been withheld correctly by his employer, provided that such individual has only one employer for the taxable year. The same with letter A. Letter A, guys, purely compensation income. Okay? Ang gin-mention niya, you are an employer. You have, you are an employee rather, and you have an employer. Then, the second condition, even though you exceed your compensation income, nag-exceed ka sa 250, you may still not required to file your income tax return if your employer has been correctly withheld your monthly income tax. Okay? Correctly withheld. If you can, I know that you have idea that employees, every time their payroll period arrives, their payslip contains what we call withholding tax. Okay? So that is what we meant on letter B. Have been correctly withheld. Take note, the tax that being withheld by your employer, and it will be discussed next chapter. The tax that will be that your employer is withholding on the income or on the compensation income of his employees is just an advanced tax. Okay? So, estimated tax lang na siya, guys. That is not the accurate tax. So, the accurate tax will be reconciled at the end of the year. Okay? The same with business, and we will go through on this particular topic next meeting. Okay? So, if ever that your employer is correctly withheld and filed and paid your income tax, an employee is no longer required to file his or her income tax return. Take note, who's only one employer. So for in case you have two or more employers, so you are required by law to file your income tax return. Third, an individual whose sole income has been subjected to final withholding tax or who is exempted from income tax pursuant to the code and other special laws. If a specific law or statutes provides that you are exempted from filing your income tax return, so of course, the Bureau of Internal will consider or will honor that exemption. Okay? So, if your income is already subjected to final withholding tax, like for example, your only income is just interest income on your deposits, royalties, and other passive income, which is subject to final tax, you are no longer required to file your income tax return because the tax that ang tax na gimbuin sa imo, withheld from your income, is already subject to final. Final na to. Okay? Take note. Final na to. So, in short, kung final na, it's already done. That's why your BIR, our law, is no longer required that individual to file a specific income, his income tax return. Okay? Final tax na nga withholding and submitted and remitted to the Bureau of Internal Revenue, that's enough if your income is subject to final tax. Okay? Letter B, an individual who is a minimum wage earner. I think that's very comprehensible. We don't need to explain that one. Letter E, those who are qualified under substituted filing. However, still substituted filing applies only if all of the following requirements are present. The employee received, actually guys, letter E is just a support lang on what we have discussed on letter A and B. Okay? So, letter B, letter B lang gali. Letter B is considered is what we call substituted filing. Amo ning ginambal sa letter B. Letter B is the description for substituted filing. However, substituted filing applies only if all of the following requirements are present. And that is, the employee received purely compensation, regardless of the amount, during the taxable year. Purely compensation. Waay siya negosyo. Waay siya nag-practice ng profession niya. Okay? So, he is only earning purely compensation. Okay? The employee received income from one employer in the Philippines during the taxable year. Okay? Take note, one employer. If you have two employers, it means that you have two withholding agents. Kung may duwa ka withholding agent, it means that two taxpayer ang marimit na sa Bureau of Internal Revenue. Duwa ka employer ang marimit sa internal revenue. So guys, try to imagine if you are earning 100,000 from one of your employer and you are also earning 400,000 on one of your employer. So your first employer will not subject, hindi ka na pagbuhay ng tax di ba? Because you are earning 100,000 which is not subject to tax as provided by letter A. Then your second employer is giving you 400,000 nga compensation. So sa imo nga second employer may tax ka. But your tax is under-declared. You should have paid your income tax based on your 500 total compensation income. Okay? Dapat i-add mo to, ang tanan mo nga income nga na-earn from your two employers. So in that case, that's the time you have to file and pay your income tax based on your 500,000 compensation income. Okay? That's the reason why the substituted filing is not applicable in that particular case. Kay makulang or ma-under-declared ang collection of taxes because ang imo employer will file his the tax return of his employee and the another employer nimo will also file his own employee. Way nag-istorya na si employer 1 mo kag si employer 2 nga awa mo ning income ni Mr. So and so. So i-adda ang income man di sa ako ni Mr. So and so para mag-compute sa tax. So that is not practicable. That's why you are not prohibited by law to have a 2 or more employers as long as kaya mo, but the concerns lang sang aton nga pungsod, you have that all of your income should be properly accounted and the income tax will be properly declared and paid to the Bureau of Internal Revenue. Okay? Next. The amount of tax due the employee at the end of the year equals the amount of withheld by the employer. Okay? So in case that the amount of withholding at the end of the year will not be the same with the actual tax that the taxpayer will going to pay, so of course, the Bureau of Internal Revenue will require you to file your income tax return. So this is on the side of your employer na. If ever hindi sila kabalo mag-compute kag mag-estimate sa inyong tax, so you have to file your income tax return just in case. Okay? So actually guys, we will learn this next chapter. So I'm going to reserve na lang the detailed explanation in this one next chapter. Next, the employee's spouse also complies with all the 3 stated above. So if ever that individual is married, so that 3 conditions should be present for both the taxpayer and its spouse. The employer files the annual income tax return. Okay, so we will learn this also next chapter. The employer issues BIR Form 2306. So your BIR Form 2306 will be the income tax return of employee earning purely compensation income. Okay, who are exempted from income tax? An income tax from income from abroad of a non-resident citizen. Okay, so of course, in our discussion on chapter 1, we all know that chapter 2 rather, we all know that only resident citizen of the Philippines is subject to his income from all sources. The rest of the taxpayer classification will only be subjected for income tax on their income earned inside the Philippines. Wala na. Okay? Citizen of the Philippines to establish to the satisfaction of the commissioner. So we have already discussed that one on chapter 2. So this is just a sort of review na lang for your information. This is just a sort of review. Okay, can we proceed? Who are exempt from income tax? Overseas Filipino worker, including seaman. Okay, so they are exempted from income tax. Regardless kung pilang ilang aging na earn. Okay? So they are not bound to file their income tax return in the Philippines. C, JPP, GSIS, Social, SSS, PhilHealth, and your local water districts. Okay. Let's go now to the next tax, final tax on passive income of citizen and residents alien of the Philippines. So guys, we have already discussed earlier in this chapter what are passive income. Okay? So these are income that the taxpayer merely waits to come in. Ang amount nga magsulod sa iya. Okay? So we have already discussed this on our previous early in this chapter that this is no longer declared in our income tax return because it is subject to final income tax. Okay? So, separate niya ang filing niya. You don't need to include this income enumerated in this slide in our gross income subject to income tax using graduated tax table. So, hindi nyo siya pag-i-include. Please take note. Okay? Please take note that this is subject to a separate final tax on passive income. So, first, we have your interest from currency deposit, trust fund, and other substitutes. Royalties. Okay? Ara siya, guys. This is just a sample of passbook, savings account. So, may nagsulod nga payment. Or, in the case of bank, that's payment. But, in case of with the depositor, it is an income. It is considered as interest income. So, there is 32.38 pesos income nga nagsulod. Then take note there is an interest on the next column which is 0.28. So your 0.28 represents the 20% final tax. So guys, if I am the depositor, hindi ko na I am not the party to pay this 0.28. So kung na-notice nyo guys, it was deducted outright. Okay? Kayo, instead of 32.38, 32.66 na ang na-credit sa akon nga passbook. So this 0.28 together with other depositors sang gold bank will remit, file, and pay the total amount of final taxes withheld from interest expense on the case of gold and interest income on the case of the taxpayer. Siya ni ang ma-remit sa kay Bureau of Internal Revenue. Okay? That's why in our end, as taxpayer, this is considered as our final tax. And this 32.38 is no longer declared or part of our computation in income tax using graduated tax table. Please take note. Okay? Same true with royalties. Except lang kano guys, for books, literary, musical composition, that's 10%. Prices. So, kung na-notice nyo guys, ang famous movie nga Three Idiots. So, this person is trying to obtain a signature from this inventor. Okay? I know that you know the background. So, gakuha siya sang signature. What is that signature? His company will manufacture on his patented inventions. Okay? In that case, his company will pay royalties from this inventor. So, the amount that this person will pay to the inventor will be net of 10% final tax on passive income or final tax on royalty income. Okay? So, if ever that mabayad siya, like for example, 1 million, that's net, the amount that this person or this inventor will going to receive is only 900,000. Less 10%. Okay? And the company of this person is the one who are going to file the final tax return, and pay to the Bureau of Internal Revenue. Okay? in case they are Filipinos or under the jurisdiction of the Philippine government. Okay? Next. Prices. So, prices will be subjected to what we call graduated income tax. So, this is not subject to, ano ka na? To for prices less than 10,000. Okay? Less than 10,000, i-include mo siya in our computation for income tax purposes. Sa ano gidya sa normal income tax, okay? Or sa regular income tax using the graduated income tax table. If the price is less than 10,000. In case that the price is exceeding 10,000, just like what you have seen in the picture, let's assume that this is a legal game. Legal siya nga game. So, it will be subject to 20%. 20% will be withheld by the game master or the promoters of the game, and they will file and pay the 20% of this price to the Bureau of Internal Revenue. Okay? Then we have your winnings. So winnings guys sa mga lottery na in the point of view of income taxation, when we say winnings, that refers to game of chance. Okay? While prizes guys are the amount earned by persons who are actually involved in a game show or in a game activity. Okay? Mga competition, prizes na ang tawag. Pag game of luck, that's winnings. Okay? So for winnings, that's 20%. Except lang guys for Philippine Charity Sweepstakes Office and Lotto. Okay? So not amounting to 10,000. So that's 20%. Okay? For PCSO and Lotto, 10% or less are exempted. So interest from depository bank under expanded foreign currency. So if it happens that you have deposits from you have foreign currency deposits from banks nga offer sang sina nga mga services, so the interest income that you're going to receive out from your deposit will be subjected for a 15% final withholding tax. For cash dividend and property dividend received by an individual from a domestic corporation, so it will be withheld with 10%. Then, for shares of an individual in the distributed net income after tax of partners except GPP, wala labot GPP guys, that's 10%. Okay? Number 8 and number 9, actually, hindi ni siya, this is not referred as a passive income or final tax on passive income. This is referred as capital gains tax. So please take note. We will discuss this later in this chapter. Okay, so that's 6% from shares of stocks not traded in the stock exchange or those stocks sold outside the Philippine Stock Exchange, ang PSE natin yung ginatawag. Try to check that on the internet. So if the business activity or the transfer is happened outside the Philippine Stock Exchange, so the Bureau of Internal Revenue, of course, will withheld 15%. The seller or the person or the taxpayer who gained in that transaction will pay 15% nga capital gains tax. So interest income from long-term deposits in the form of savings, common individual trust, deposit statutes, investment management account, other investment evidence by certificates in such form prescribed by our Bangko Sentral ng Pilipinas, that's exempted from final taxes. Okay, so for 4 years or less than, that's 5%. 3 years or less than 4 years, that's 12%, and less than 3 years, that's 20%. Okay? So, take note, may condition sa guys. So, number 10 na say condition. Upon pretermination. Just read na lang na guys. Okay. Next. Okay. Final tax on passive income of non-resident alien not engaged in trade. So, guys, just be responsible to compare the rates. So, the same na siya naging discuss natin bago lang. what's differ is kung sino ang taxpayer. This time, that is for non-resident alien not engaged in trade or business. So actually, the rates ang nag-change lang is only the rates, but the income is uh, still significant. Okay? So ang rate lang na ang nag-change. And please consider lang guys, this income should be earned inside the Philippines lang. Okay? So those income by the non-resident alien individual earned outside the Philippines is no longer subject to tax under our Philippine law. That is outside the jurisdiction of the Philippine government. Okay? So just be responsible to compare the rates. Okay. So final withholding tax. This will be the final withholding tax return. And this return is filed and paid by the income at source. Kung sino ang nag-atag sang income. Okay? Hindi ang recipient sang income. Okay? So in case of interest, so this return will no longer be filed by the depositor. This form will be filed by the bank. Okay? Ang bangko. So, those party who gives the income should withheld, file, and pay the income, the final withholding tax return. Okay? So, final withholding tax return is a kind of withholding tax which prescribe on certain income payments and is not creditable against income tax due of the payee on other income subject to regular rates of tax for the taxable year. Income tax withheld constitute the full and final, take note, full and final payment of income tax due from payee on the particular income subject to final withholding tax. Okay? That's why I have already discussed this last meeting that income subject to final tax is no longer declared in our income tax return using regular rates or using regular or the graduated income tax rates. Okay? So proceed. Let's go now to capital gains tax. Capital gains tax, this one. So just to refresh your mind, amo siya kaginang mention naton. Okay, which is highlighted this dire oh. Arisa. Okay? 6 and 15. Okay. Capital gains tax. Capital gains tax is a tax imposed on the gains presumed to have been realized by the seller from the sale, exchange, or disposition of capital gains located in the Philippines. So this is an onerous transfer, including pacto, diretto sales, and other forms of conditional sale. So when we say onerous transfer, guys, ng both parties give a particular asset in exchange of another asset of another party. Okay? So, hindi siya gratuitous nga isa lang yung naghatag. So, when we say onerous, give and take. So, gingbakali ang property in exchange for cash. So, that's what we mean when we say onerous transfer of real property. And onerous transfer of shares of stocks not traded in the local stock exchange. So, for gratuitous transfer, so the opposite of onerous transfer is gratuitous transfer. For gratuitous transfer, this will be no longer covered in this discussion. It will be discussed on your BUS tax or tax 2 next semester on your business and transfer taxes. Next semester na siya. So in this presentation or in this discussion focuses only for onerous transfer of real property or shares of stocks not traded in the Philippine Stock Exchange. Okay, next. Capital gains tax for onerous transfer of real property. So there shall be imposed a final tax rate of 6% based on the following figure. First is the fair market value. I know that you already knew what is fair market value from your previous accounting subjects. Okay? And this was determined by the Commissioner of the Bureau of Internal Revenue. This is what we call the BIR zonal value. Okay? So, BIR has values sa mga real estate property under its jurisdiction. Okay? Next, you have to identify the fair market value as shown in the schedule of values of the provincial and city assessors. So in case that your property is in Cebu, so the provincial or city assessors of Cebu or Cebu City has what we call assessor's value. So you have to get a document to show what is the assessor's value on that particular property nga subject for the onerous transfer. Third, the sales price of the property or fair market value. Okay? So value number 1, value number 2, value number 3 will be compared, and whichever has the higher value will be the tax base for your 6% capital gains tax. Okay? So again, you have to compare the value on number 1, number 2, and number 3. Then, whichever has the highest value among the 3 fair market values provided by different source, so that would be the tax base of your 6% capital gains tax. Okay? So, however, the filing of return is no longer required by the real property transaction involves the following. It is not classified as a capital asset. So, in case that your property is your inventory, like for example, Camellia, you are not required to file your capital gains tax return. Okay? Because your property or your real estate property is not considered as a capital asset. It is, in my example for Camellia, that is considered as an inventory. So, kung inventory na siya, guys, you have to pay, or that particular transaction is subject to business taxes na, not capital gains tax, but rather business tax. So, that would be discussed next semester. And your property, of course, is not located in the Philippines because the situs of property is the location of the property. So if the property is outside the Philippines, so the jurisdiction of Philippine laws is no longer applicable. Hindi na pwede ma-apply or ma-enforce sa outside of the territory of the Philippines. So this position is gratuitous. Again, as I've mentioned earlier on the previous slide, that gratuitous transfer is not part of this discussion. Gratuitous transfer means that ging donate lang or naman, namo lang ang property will be subject on your business and transfer taxes next semester. Okay? This position is pursuant to the Comprehensive Agrarian Reform because there is a special law that has a jurisdiction on that particular property. So, capital gains tax, the filing of your income tax return rather is not covered or not required. Okay. Sige. Next. For capital gains tax, for onerous transfer of shares of stocks not traded through the local stock exchange. So the computation, so it is a final tax at the rates prescribed below shall be computed based on the net capital gains realized from the sale, barter, exchange, or disposition. So still onerous. So give and take, may give and take ng relationship between the buyer and the seller. Disposition of shares of stocks in a domestic corporation classified as capital asset. Take note, classified as capital asset. So if the shares of stocks, and if you are a trading company, your business is buying and selling of shares of stocks. So the discussion is not for you. Hindi ni applicable para sa mga buyers and sellers of shares of stocks or mga traders. Okay? Classified as capital asset. Take note, you have to consider that as in capital asset. This is your qualifying condition para makabayad ka sa ginatawag what we call capital gains tax on your shares of stocks na traded in the local stock market. Okay? So, for individual, that's 15%. For corporation, and your corporation is a domestic one, so that's for 15% as well. But, the rates change if the corporation is foreign or the taxpayer is foreign corporation. So, the first 100,000 of the gain, when we say gain, guys, selling price less cost equals gain. So, that would be your tax base for your 5% capital gains tax. On any amount in excess of 100,000 will be subject to 10%. Regardless kung pila na siyang inyong gain. Take note for the term used, it is gain. Okay? Gain. It is the difference between the selling price and the cost of your shares of stocks. That would be subject to 10% if it exceed 100,000. Okay. Okay, we are through with tax on self-employed and professional taxpayer. Next topic will be tax on employed taxpayers. So for those taxpayers under the labor force, okay? So we will talk what are the taxes applicable, how to compute, and how to file, kung sino mag-file, and any other matters or topics related to the income tax of employed taxpayer. That would be next meeting. See you. See you next meeting. Okay, guys. See you next meeting.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you, sir.